Why don't we start with your outlook for pandemic-related claims and reserves for 2021?
Sure. So after the $3.9 billion that we've put up in 2020, we've been able to be fairly concrete about what we would expect in the property casualty businesses for 2021. And that's a total loss of less than $500 million during the course of the year. This would cover losses from events that are canceled, from business interruption claims that are covered under certain policies on property, and credit and surety and other casualty losses that might be impacted. Where we have a little more challenging time to estimate what the losses could be in 2021 is with respect to our life and health re business. And there what we said is that's going to depend on the number of people that succumb to the illness during the course of this year. We've seen some encouraging numbers in the drops of caseloads in most Western economies. We expect that to continue. With the onset of vaccination programs in place, we also hope that you're going to see a steep decline in deaths. But we can't predict that, and so we'll have to measure this on a month-by-month basis with the reality that we find in various countries.
So what kind of premium increases are you seeing, and do you think that they're going to be enough to compensate for the losses that you saw in 2020 for the losses that you're seeing at the beginning of this year?
Yeah, so in our reinsurance business for property casualty risks, we actually have a large renewal on January 1. There we saw price increases on a nominal basis go up by 6.5%. We were actually quite restrictive in making sure that we know what we're covering, and we're encouraging our primary companies to do the same with clarity on what risks are in and what risks are out. And we've been able to exclude in almost all the cases any cover of infectious diseases driven business interruption. It's unfortunate for society. We understand that that's challenging, but the reality is that this is a risk that's very, very difficult for the insurance industry to be able to cover. So we've cleaned out the book and the exposures there. We've reduced the amount of exposure we have for event cancellations, and I think going forward we're in much better shape. We've lowered our guidance, or actually improved the guidance for the combined ratio targets, both for P&C Re and for our large commercial business corporate solutions.
Do you have any exposure to, in any way, vaccine rollouts or problems that could arise from them?
Typically not. We've not been a big reinsurer or insurer of the pharmaceutical industry for a number of years, and in many cases these industries, or this specific rollout related to COVID-19, are being sponsored by governments in ways that actually reduces the industry risk materially. What I would say is, we're strongly encouraging a organized and dedicated rollout of the vaccine across the countries, affecting first the essential workers and secondly those at highest risks. In a country like Israel, where we see this a little further along than almost any other jurisdiction, we've seen the massive change in the infection rates for people that are at risk, and we're starting to see some indications that the mortality related to this is also dropping. So we would expect in places like the UK and the US, which are also doing a better job, relatively speaking, of rolling out the vaccines, for the caseload to start dropping significantly.
John, what about, the other issue, not just the pandemic, but that we're looking at right now is climate change. With this deep freeze in Texas, it looks like one of the main problems is nobody thought in San Antonio that you needed to insulate your pipes, right? It just doesn't get that cold. It's like insuring against earthquakes in Chicago. There's just not really a reason to, but maybe now there is. How does climate change affect your business?
So there's a series of what we call secondary perils that involve windstorms, tornadoes, hail, floods, and wildfires, which have all seen an increased frequency in recent years. That's separate from the primary perils like hurricanes and earthquake, which unfortunately has also been problematic for the industry in recent years. But having said that, I think the world is just going to have to help get itself more resilient to major fluctuations related by climate, typically with heat and dryness, but not always, as Texas is showing us. And so I think part of our job is to work with our own models to help people understand what risks are really out there, price those risks, and behave accordingly to try to mitigate them as much as possible.